Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the triangle scenario where we are looking for a 5-wave sideways ABCDE structure, and after E is in, we are then looking for price to move to the upside for new highs where the double top will be taken, and an interesting level of resistance is going to be 36k, where we also have some additional resistance, which is the blue target box over here between 35.9 and 36.2k. Now, a rule that is important in triangles is that 4 out of the 5 waves have to be simple zigzags, and a simple zigzag is a 5-3 5-wave structure. Now you can see that wave C is a complex zigzag structure in a WXY double zigzag. So because wave C is already complex, wave D, E, but also A and B have to be simple structures. And that is why in the final wave, wave E, we're then looking for an ABC 5-3-5 simple zigzag. As explained yesterday, the reason I don't like C and therefore E finishing over here where I put wave A for then an ABC is because this looks very much like a 3-wave structure, not a 5-wave structure, and as mentioned just now, wave E preferably is a simple zigzag structure in an ABC. Now this can't be the end of E because the low got taken, which is not allowed if you look for impulsive continuation, and also putting the low of C here in an ABC makes this very much like a 3-wave structure, which isn't nice. So now I have 1, 2, 3, 4, 5, which then is an expanding structure in wave A, followed by a 3-wave structure in wave B, an ABC, simple zigzag for now wave C to the downside, where important support is going to be this blue box over here. The support area sits between 33.8k and 33.9k and can then be the end of wave E, where we can then look for continuation to the upside. Now the invalidation of this scenario is if price would push to the upside for wave D over here, or if price continues below this target box to the downside and hits this low. Now if we zoom in to this wave B, as that is something I spoke about yesterday as well, last night in the previous video, then over here one of the scenarios was an internal ABC to the upside. So here in green is the ABC for wave E, and then inside B, looking for this being an ABC with a flat in wave B. And this red line over here is very, very important, and that is something I posted about last night. Now you can read this for yourself over here. However, I was looking for this to be a 3-wave structure ABC to the upside, where the red line, as you can see, is the point of control of this small range over here, which for me was the main area of resistance, closing candles above this range point of control, this red line, and probabilities for me would increase for continuation to take the highs, eventually maybe even look for 36k, but not passing this level is for me a sign of returning towards the downside. Also, the most common target area for wave C, being the white box, was here as well, which is the 1 to the 1.236, taken from the low to the high to the low over here, for then the target of a wave C. Now as you can see over here on the 15-minute as well, very, very nicely respected, tested this level multiple times, and also the second time price came back, we had big bearish CVD divergences showing great resistance and absorption of market longs for then a push towards the downside, where then we're looking for a wave C, where then wave 1 and 2 are finished, and we're currently looking for a wave 3 to the downside, again looking for that blue box over here. Another scenario that I do have on my chart is a WXY, where wave Y in blue is going to be a triangle. Because of the complexity of this range at the moment, we are starting to be creative as well, and this is definitely still a possible scenario where we have a W in a flat, X is complex, and then we expect a wave Y to the downside. And because X can be complex, X can very much be a WXY scenario where wave W is a zigzag, then over here we have wave X in a 3-wave structure flat, and then eventually wave Y can also still be a triangle, where this is then a wave A looking for B, C, D, E, before then continuation to the downside. But as you notice, there's still then more downside to come. It's very difficult, or actually kind of like almost impossible, to find a scenario where you're going to go to the double top already without going further to the downside. So in this scenario, we again have a triangle, and then you're going to move towards the downside. The only bullish scenario would be for this to be the low, and then looking for this to be a wave 1, 2 continuation to the upside, of course. But then preferably you're still going to hit the target box because wave 2 finished over here with this low, this pivot. Well, this is very much like a 3-wave structure, especially seeing price moving down and the overlap with 1, increasing probabilities. You're eventually going to take the lows and reach the target box. But in this scenario, again, WXY, we can have a wave Y triangle, which is allowed because a triangle can be in a wave B, can be a wave 4, B, X, Y, and Z. So those are the positions for a triangle. So wave Y is absolutely fine. But yeah, we have to wait and see how this moves to the downside, of course. Now, if we look at the volume profile of this range, it switched a little bit because the value area high was actually a little bit lower over here, but moved to the upside now, adding to the resistance here as well at the range point of control that I had on my chart over here. As you can see, some nice confluence. The point of control pretty much at the same level. That didn't change, but the value area low did change. It went from the lower edge of the blue box that I have over here, now just like in the middle, sitting at 33.9k, which is one of the support confluences that I have in this particular area. You can see that the weekly naked point of control has been respected very nicely, about like 2, maybe even more times if you count the almost hitting the weekly naked point of control. But you can imagine if price comes down here again, the probabilities of breaking this level is very, very high. And therefore, I'm looking for that blue box to the downside. Now, if you look at the CVD divergences, of course, we have all of this going on, the bigger one. But I like to look at the more local CVD divergences, which are also more relevant. We had bullish, big bullish CVD divergences over here for price pushing towards the upside. That's also funny, right after the video last night, of course, that happened straight after the video, we had this on the CVD chart. So my video came online when price was ranging over here. Nothing was really happening. We had a little bit of bearish CVD eventually after posting as well. Price moving down, all nice, bearish CVD playing out. But then look at this, high price moving to the upside, higher low in price. Look at the CVD here. Lower low on yellow, big absorption going on for then that push towards the upside. And then once more, bit of bearish CVD, but that is countered by bullish CVD as well on the same line over here. Higher low in price, lower low on the CVD, more pushes towards the upside. But then we reach the resistance area that I just showed you. And look at the bearish CVD divergences here. Lower high on price, higher high on yellow once more. Absorption of market longs going on, and eventually price pushing towards the downside. Even more clear on the 15. Lower high on price, but higher high on yellow. Bearish CVD divergence while hitting resistance. Price moving towards the downside. Now you can see over here, higher low on price, lower low on the CVD on yellow, bullish CVD divergence. But personally, I would now prefer to see bullish CVD divergences more locally. So not really comparing or using pivots on the left side of the recent high. But I would like price to have a bit of a bounce, retracement, and then show me bullish CVD on the right side of the new high over here. If we then finally look at the probabilities of the different scenarios, then on the micro time frame in this particular range, I'm looking for the target box to be hit eventually, and then observe the reaction over here for either a bounce or continuation to the downside. But in general, when we look at the market structure, and we also sometimes zoom out, we're in bullish market structure, and this is very much a wave 4 type of range at the moment, which increases probabilities that eventually the double top will be taken and the trend will continue that we already have towards the upside. Now again, this target box, very, very interesting, and something I do like to mention is that potentially something like this is important more locally or interesting, where price bounces, move up, move down, bullish CVD, and then we can take it from there. That's at least something that I'll be looking for. You know, you want to have some proof of support or something, not catching knives, because of course price can still do this, but probabilities in general are higher to take the double top, and more locally higher to reach the target box, and then we'll take it from there. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.